This is the 2012 depreciation question. The last day, just before the break, we looked at the depreciation table. So we filled that out for the question, obviously given the information that we got here. And you're asked in the question, once you've done the table just gets you all the information for your accounts. Once we've done that, then we can start the accounts here. So we have a vehicles account, we have the provision for depreciation account, and we have the disposal account. So we need to go and we need to work out these three accounts for the 2 years, 2011 and 2012. So first thing I'm going to do here is the vehicles account. So how do I do the vehicles account? I started by basically stating how much they had in vehicles at the beginning of that year. So again, the 2 years we're asked to do it for, you can see it here, 2011 and 2012. So I'm asked to do it for both of those years. So if I'm trying to show how much the vehicles had at the beginning of 2011, I need to find out how much these vehicles were worth, because these are the costs. How much are they worth at 2011? And the way I can check that out here is we have done this table and filled it in and found out the costs. And these three vehicles we had bought before 2011. So I've bought these three vehicles before 2011. I also had the fridge here before 2011. So that's why I add up these. That's why I add up these three figures, vehicles and the fridge. We're adding these four figures up because these were the vehicles that we owned at the beginning of 2011, and that's their cost, 195,000. So those three vehicles that we owned and the fridge at the beginning of 2011 have a cost of 195,000. That's the beginning of vehicles account. Quite simply after that, all we have to do now is look at 2011. If we bought a vehicle, we add it, and if we disposed of any vehicle, we took it away, and then we need to find our balance at the end. So what happened? Again, it told us that we traded in a vehicle number one, but vehicle number one also had the fridge. We bought a new vehicle costing 75,000. So these are all going to change our costs. So the new vehicle was 75,000. So I put that here on the debit side because I'm adding another vehicle on. So our vehicles are going up from 195 to going up to 75,000. But I didn't just buy that vehicle. I sold a vehicle as well, and then it was vehicle number one. Vehicle number one had a fridge fitted into it, and the cost of vehicle number one was 50,000. And again, I had that up here in my table. So that's the cost of vehicle number one. We can see that up here. And what's the cost of the fridge? It tells us here costing 15,000. So again, the first thing we do is the vehicles account relocate cost. So I got rid of the 50,000 euro vehicle number one and the 15,000 fridge. That's 65,000 for the two of them added up together. I'm going to take that out of the vehicles account. So all I've done, I've taken my balance at the beginning of 2011 for my costs, added the new vehicle, and I've taken away the vehicle that I got rid of. The difference, basically the balance on both sides is 270k, and the difference here is 205,000, and then I can have my balance brought down here of 205,000. That's my balance carried down. This is my balance brought down beginning in 2012. And we'll look at 2012 now. So for 2012, again for the vehicles, it's the same thing. My cost was 205,000. That's the beginning of the year. What happened for 2012? We can see here vehicle number 3 was crashed, traded in. So we got rid of vehicle number 3. We bought a new vehicle, vehicle number 5, costing 86,000. So this new vehicle that I bought, it's worth 86,000. What am I going to do? Well, I'm going to add that on. I'm just going to open all this up here. So I'm going to add on the new vehicle that I bought. Let's see if I can get this going. New vehicle I bought is 86,000. So this is my beginning of the year. This is how much my vehicles were worth. I add on the new vehicle. What else happened? I got rid of vehicle number 3. Vehicle number 3 cost 70,000. So I take that away here on the credit side. Again, exact same. Difference on both sides is 291,000. So the difference is 221,000 here on the credit side. And that's because I balance carried down on the credit side, balance brought down on the debit side for the beginning of the next year. And then I have the question finished. I've gone up all the way to 1st to the 1st 2013. So for the vehicles account now, I have that complete. The depreciation account. So this is my second account here. For my depreciation account at the beginning of 2011, sorry, this here on the credit side, how much was the total depreciation? So I can find that here above in the table. We found the depreciation for 2007, 8, 9, and 10 here. And these figures here were added up, and I have totals. So my total depreciation for each vehicle at the beginning of 2011 is here, and I've just simply added it up at the bottom. So this is my total depreciation at the 1st of the 1st 2011 on these 3 vehicles and the fridge, because I owned those vehicles at the beginning of 2011. I did not own these 2. So 77,750 is my depreciation figure for the beginning of 2011. And again, this is a liability account, so this goes on the credit side. Just like here above, that's the start of the question. All I have to do now is, if I disposed of any vehicle, I need to take out its depreciation, and then at the end of the year I need to add in the year's depreciation. So 2011, what happened? I got rid of vehicle number 1 and I got rid of the fridge as well. So vehicle number 1 and the fridge, I got rid of those. So up here, when we got rid of it, we took out the cost. Here we take out the depreciation. So this is my first figure, that's my balance at the start of the year. Now I need to get rid of the depreciation up here for vehicle number 1 and the fridge. And this was all the depreciation here, all of it from 2007 up to 2010 and 2011. So the full depreciation when we disposed vehicle number 1 was 35 grand, and the full depreciation on the fridge was 10,500. If I add both of those up together, it brings me to 45,500. So this 45,500 is the total depreciation on the vehicle number 1 and the fridge that we had fitted. So 45,500 is the total depreciation. I sold that vehicle, it's gone, so I take it out here. I put it on the debit side. This is my balance for depreciation at the beginning of the year. I got rid of vehicle number 1, and I'm going to say plus F for fridge. So I got rid of vehicle number 1 in the fridge. This was the total depreciation that those vehicles had, or that vehicle had. And basically at the end of the year now, I just need to add on any depreciation that we've had this year. And if I look up here for 2011, the first year we're dealing with, this was all the depreciation. If I add all that up, it gets to 29,750. So that's my total depreciation for 2011. Again, depreciation account 2011 at the end of the year, P&L 29,750. So I'm just, that figure here that we got for the total depreciation for that year goes in. All I've done, depreciation at the beginning of 2011, if you sell anything, you debit the total depreciation for what you sold just to get rid of it, to take it away from this balance. And then if you have any other depreciation for the year, which you will at the end of the year, the P&L figure, you just add that in here. Balance on both sides is 107,500. So my balance carried down here, which is the missing figure, this is a missing figure of 62,000. And again, this will become my balance brought down here. So let's look at 2012. Let's show that side. So my balance carried down here at the end of 2011 becomes my balance brought down at the beginning of 2012, 62,000. I'm going to do the exact same. If I sold something, I'm going to get rid of the depreciation by putting it on the opposite side here on the debit side. And at the end of the year, any depreciation I have, I'm going to add it here on the credit side. So 62,000 is my total depreciation going into 2012. I sold vehicle number 3. So let's scroll up here. Vehicle number 3 is here. What was the total depreciation? Total depreciation for vehicle number 3, 27,125. So let's go down here. Vehicle number 3, total depreciation. Just going to get this in here. Total depreciation for vehicle number 3 was 27,125. I just sold that vehicle, so let's debit that figure just to get rid of it. Let's take it away from the 62 grand. At the end of the year, what was my P&L figure? What was my total depreciation at the end of 2012? 2012, that's the end of the year. That's how much we got for the full 2012 year for each vehicle, 32,550. So what do I add in here? 32,550. This was the figure at the beginning of 2012. This is the vehicle I got rid of. This is the depreciation I had to add throughout the year. Balance on both sides is 94,550, and the difference is going to be my balance carried down. It's 67,425. It is a debit side here above the line, so below the line it is a credit side figure of 67,425. Again, you just drag it over to the opposite side below the line. That's my depreciation account done up to 2013. I'm going to drag this one down here. So all I have to do now is the disposal account. So for the disposal account, there's two vehicles that we got rid of. In 2011, we got rid of vehicle number 1. So let's find out if we made a profit or loss on vehicle number 1 and the fridge together. So vehicle number 1 in the fridge, the disposal account is very easy to start, because if you go up here, this is my vehicle number 1 and the fridge. This was their cost when I got rid of them, and this was their depreciation for vehicle number 1 in the fridge when I got rid of them. So this 65,000 here was in the credit side. This is in my vehicles account. It's called disposal. I'm going to take this figure and take it to the disposal account, and I'm going to call it vehicle number 1. That's the cost of vehicle number 1. So this 65,000 from the vehicles account goes to the debit side down here. And again, the depreciation that was on vehicle number 1 is going to go again to the opposite side. So these are just basically the figures that we call disposal that had to do with vehicle number 1. And I'm just putting them in the opposite side. That's the cost, 65 grand. That's the depreciation, 45,500. All I'm left to do here is just read the question. It said that vehicle number 1 was traded in for 20 grand against a new vehicle. It had the fridge fitted in, and that's the information about the depreciation. So I can see that vehicle number 1 was traded in for 20,000. So they got 20 grand when they traded it in. So if I'm trying to find out if they made a profit or loss on the disposal, I'm going to put the 20 grand in here on the credit side, away from the cost. So it's going to be on the credit side with the depreciation. These two figures are in here on the credit side, and I just have 65,000 on the debit side. So if I add up both sides, this side is bigger. It's 65,500. That becomes the balance on both sides. And then this becomes our missing figure. This is our P&L figure, and that's usually how we figure these accounts out. The missing figure is usually our profit and loss. So in this case, we would have made a profit because vehicle number 1 was worth 65 grand. But it had lost value of 45,500, and we had gotten 20 grand for it. So that's how much the value had dropped, and that's how much we received for it. But technically it was only worth 65,000. So in the long run, we actually made a 500 euro profit on selling that vehicle. The vehicle number 3 is our second one. Again, that was for 2012, so just kind of shaded that one out. There is one thing that I kind of want to still shade out a second. The vehicle number 3, exact same thing. We look at the cost and we look at the depreciation. So vehicle number 3, this was my cost account. This is how much it cost when we got rid of it, 70 grand. So I take that here from the credit side and I just put it down here on the debit side of the vehicles account. Again, for depreciation, I just go up to my depreciation account. What was my disposal figure for 2000 or for vehicle number 3? 27,125. I take it from the debit side down here to the credit side, 27,125. Again, this is the exact same. You're just basically take it to the other side. It's called the disposal up here, and you just drag it down to the disposal account. The vehicle number 3 cost and depreciation is now dealt with, so we can read the rest here. So vehicle number 3 was crashed and traded in against a new vehicle. So the company received compensation to the value of 25 grand. So that's how much the value had dropped by. They received a further compensation of 25 grand. So I'm going to put that in here. And what we're told after that is we're actually told what the profit was. We're told that the profit and loss account showed a profit on disposal of 1,125. So usually the missing figure is the profit figure. But in this case, they told us the cost is 70 grand. It had dropped in value by 27,125. That was a compensation. They actually tell us how much the P&L was. They told us we made a profit. So profit is shown here on the debit side, 1,125. If I add up both sides, get 71,125. and the difference here, I'm missing a figure here, and the difference is going to be how much I received for my vehicle. It's going to be my trade-in. So I'll just call it trade-in rather than bank. So the difference is going to be how much I received for the vehicle, because that's how much the vehicle's value dropped by. That was the compensation I got for it, and I have a little trade-in value here. And my trade-in value, how much I received for it, it's going to be 19 grand, and that's the missing figure in this case. Just because they told us what the profit was, so all we were missing was finding out how much they received when they traded in vehicle number 3. So that's the 2012 question done out. We've done a few of these out again, but it's just good to see it done out again bit by bit. And I have a question that I'll assign you for homework.